Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan or plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we're celebrating today. We celebrate every day on Ron Siegel Radio. What do we have today? Let's see. National Social Media Giving Day. I don't know if I can even get behind that one at all. You know, I think we got to get off of social. And I know I'm there a lot, but I think social media might be one to get rid of. Get out of the doghouse today. I don't know if that'll ever happen. I get myself in the doghouse all the time. National Gummy Worm Day. Okay, I like candy of all sorts. So gummy worms, you know, we can go with gummy worms. That one's okay. I'm not sure it's great, but it's just okay. Do you like Josh? We should have used this as a question: gummy worms or sour gummy worms? You know, which do you prefer? A lot of folks like the sour ones. I think my kids like the sour ones best. My grandson likes the sour stuff. National Tapioca Pudding Day. I'm not a tapioca pudding person, and I'm probably even less tapioca pudding because there's no whipped cream on there. So, you know, I guess we're not going to be going too much with tapioca pudding. I like chocolate pudding. Of course, if it's chocolate, I'm there. I like anything that's chocolate. But you got to have the whipped cream on it. Got to throw the whipped cream on it. I think we did come up with a question of the day, which we do on a regular basis. Okay, this one you got to think about. You're on a deserted island for a year and allowed one movie to watch. What is it? Josh, do you have one? I'm not a movie person, so I don't know that I would even have a movie. Maybe if I had to come up with something, Brian's song. I like the original Brian song. I like Top Gun. And maybe, okay, I might be dating myself here. Josh, tell me if you remember. My kids didn't remember this one. I had to play it for them. Smokey and the Bandit. Okay, Smokey, you can never go wrong with Smokey and the Bandit. Now, if you notice, I'm not sure any of those movies that I mentioned were done this century. I think every one of them was in the last century. Okay, so you're left on a deserted island for a year and allowed one movie to watch. What is it? Put that in the chat. If you're listening to us live on radio, ABC News and Talk this afternoon, yell at the radio. We hear those. We are able to hear it when you yell at the radio. So you're left on a deserted island for a year, allowed one movie to watch. What is it? Okay, let's take a look and see what the markets are doing today, what the news of the day is. Dow Jones Industrial Average is up 306 points. S&P is up 36.5. The NASDAQ up 144. Oil down 24 cents a barrel. What is the news of the day? Well, is there anything else going on other than you look at this attempted assassination? And I'm not going to say too much about it. There's nothing that I can add to this story that isn't being covered over and over again. Just a tough day, and it's a shame that you see these things going on. But is it really surprising with how negative all of the media is? Just throw that out there for you. What else is going on? So here's the question that we really would be asking is, what does this mean for the markets? Does it mean anything for the markets? A lot of folks are coming out and saying, well, they're of the belief that all these things that keep going on, the geopolitical issues, that all of them are going to lead to the idea that Trump's going to get reelected. What's that going to do for our markets? What's that going to do for our economy? Well, no matter what anybody wants to say, this is an ironic, a unique time in history, because regardless of what anybody says, we have history. We know what President Trump did. Why would he change what he already did? So are we going to have a lot of inflation? No. Are we going to have a lot of unemployment? No. Are we going to have a lot of retribution? No. Why? Because we've already seen what the guy does. Now, historically, in elections, and it will be the next one as well, we won't have the opportunity of saying, okay, we had President Trump for 4 years. We knew exactly what he did. History tells us what he did. We know the results. I was the first to share with many, many people that the tariffs were not going to matter that Trump was putting on. I heard all kinds of people, it's going to cause inflation. No. Because what happens in China and when you have those tariffs put on, China just lowered the prices of everything to offset the tariffs. They wanted their goods and services still to come into the U.S. So what did they do? They lowered the price of everything on the cost side, and the tariffs came in and didn't affect the price. If it affected the price, then they wouldn't have sold as much, supply and demand, and we wouldn't have had these issues. We would have seen the inflation. But we didn't. So we know what China does in retribution or response to Trump tariffs. The tariffs, what happens to those? Oh, they go against our debt, our national debt. Now, Trump, you can say, well, he raised the debt a lot. Yes, he did. But part of that we know had to do with all the spending that had to come out from the virus. So we see all these things. We have an idea exactly where we're heading with Trump. Then you look at Biden. Okay, lots of regulation. We understand that. If you like regulation, Biden's your guy. We saw a battle against the fossil fuel companies. If you don't like combustion engines, Biden's your guy. Wind farms, failed businesses, all these things. We know where we're heading. We just don't know, are we going left or right? But we know what we're going to get with both of them. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. One of the things I like to talk about, how do we protect you? We are liability advisors. Can you use your liabilities to protect yourself regardless of what comes up, even a lost job, potentially? So we'll talk about that. We're going to talk about real estate. Yes, we're going to get into some real estate discussions, why moving to a smaller home after retirement makes sense. Mortgage Minute, where are we heading with that? And reverse mortgages. We're going to talk about everything you need to know about reverse mortgages and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the first Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You got a phone, make the call, 800-306-1990, 800-306-1990, and every day at this time. OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They tell us what rates did on the last business day. That would be Friday, July 12. They tell us points. They do not tell us points paid, points received, or APR. They tell us the number you need to put in your mortgage calculator to find out what your principal and interest payment will be. If you don't have a mortgage calculator, ronismylender.com, ronismylender.com. Rates Friday, conventional 30-year, up 6.766. Jumbo up. I'm sorry, that was down 7.107. FHA 30-year fixed 6.601. VA 6.627. That was down. USDA, that was up 6.568. That's the rural areas. Generally no down payment. You know, well, let me get to so that's good stuff. I want to share. I'm going to go dig into that a little bit in just a minute, but I do also want to share with you, if you want to get our market thoughts every morning as early as the data allows, rsrmarketminute.com, rsrmarketminute.com. You can get our report. We send it out. We email it, again, as early as the data allows. Let's see what the markets are doing right now as we're contemplating here. The Dow Jones Industrial Average up 315 points. It's up a lot on Friday, a lot 315 today. 10-year Treasuries up 4 basis points. The bond, mortgage-backed security bond, down 5 basis points. Remember, the bonds and the yields move in opposite directions. So the rate or the yield on the 10-year Treasury is up, which stands to reason that the bond would be down. So we watch all of that for you. We're also looking at, again, we talked about inflation, and it's a big, big issue in the elections coming up. So let's talk about it a little more, because we get this from David Rosenberg, headline CPA under Trump's last term. And yes, I am talking a lot about Trump. They've got the Republican convention is going on right now as we speak. I've got it on one of the screens here in the studio. But we look at Trump's last term because we keep hearing about how much inflation we're going to have. Well, headline CPI moderated from 2.5 to 1.4, and it was never higher than 2.9 during his entire tenure. Core CPI moderated from 2.3 to 1.4, never higher than 2.4. And the import prices, which everyone's talking about, well, you can't have these import prices. We're going to have a problem there. Well, the import prices moderated from 3.8 to 1%. So was Trump so bad when it comes to inflation? We know what he did. Why wouldn't it happen again? Just throw that out there for you. University of Michigan Consumer Sentiment. University of Michigan released their Consumer Sentiment Index for the month of July, showing that consumer confidence fell once again. The index fell from 68.2 to 66, which is the fourth consecutive decline, and an 8-month low. Current conditions fell 1.8 points, while the outlook fell 2.4 points. 1 year inflation expectation dropped from 3% to 2.9%, and the employment picture remained weak. Those that expect higher incomes fell to the lowest level in over a decade, while spending intentions across the board were lower. So that one's not looking too good as well. You look at all these different areas, and none of them are coming up rosy. I did get our report this morning, and I'll share a couple things that were in the report that we put out today. And I'm not going to give you the whole thing because otherwise you're not going to go and subscribe to it. But consumer sentiment, again, concerns about job security and financial stability are growing. That influences spending habits. People are afraid. Retail sales, spending in key sectors like department stores and airlines slowing, reflecting broader economic challenges. Hotel industry, luxury brands are thriving, but those catering to the middle income earners are struggling. So the middle class getting hurt again. Mortgage rates expected to drift slightly lower in the coming weeks for loans closing sooner. Well, be careful of those. Those are some of the headlines of what you get when you subscribe to our notes in the morning. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So one of the things that we look at all the time is what are mortgages doing, and what's the rate world doing? And I like to look at a couple of different areas because most people don't understand where the rates are, what the rates are doing. And what I end up doing is go back and say, we counsel all kinds of people all the time about where rates are, what the rates are doing. And one of the things that I like to show when we're demonstrating where rates are is I look at, okay, how do you deal with these things? How do you figure out what rates are? What is your rate should be? And the fact of the matter is you really can't. You see these advertisements that come up and they tell you, okay, this is where the rates are. This is what we're looking at. And they're very, very generic. So what do I do? How do I show these numbers to people and come up with, their legitimate information, their legitimate story? Well, I show people that you can't go based on headlines. There's like 37 different loan level price adjustments, things that make you very unique to anybody else in the world. Yet, when we see the market, we say, okay, well, why is it that why is it that the market says something different? Why is it that when I look at the advertisements, I get numbers that I don't see when you quote me a rate or when anybody quotes a rate? Well, the issue becomes, take a look at what they're doing. Go to Google. I love doing this. Go to Google, put in 30-year mortgage rates today. And I just did that just now, and I put in here $500,000 loan. They come up and they say 7.507. Then I go to Mortgage News Daily, and let's see what they're saying. 6.82. One right, one wrong? No, they just look at different things. What did Freddie Mac say on Thursday? So Freddie Mac comes out with their numbers every Thursday. I used to look at those closer, but now we have so many other data. But last Thursday, 6.89. So are any of these correct? Well, they're probably all correct, but none of them pertain to you because they don't have your FICO score, your debt to income ratio, the location of your property, the loan to value. There's all of these different characteristics: purchase, refinance, rate and term, cash out. All of these things go into the score, and you're unique on every one of them. So if that's the case, and it is, you get a wide range. The fact of the matter is, for the most part, interest rates are going to be within 1/8 to 1/4% from anybody that you talk to with your characteristics. But are they looking at what's right for you? Are they looking at what we call suitability? So I consulted with a family last week, the end of the week, and the strategy is they're in the process of moving, So we're looking at a short-term hold on the loan. Well, with a short-term hold on the loan, we don't want to pay as much to buy the rate down. We know that we're going to have a 6 to 12 month hold. So we're going to price accordingly. That's why so many times an adjustable rate mortgage is better than a fixed rate mortgage. Why do we use the fixed rate mortgage? Well, that's pretty simple. Because some people say, you know something, I just want the security of it. I get it. But do you know how much money that's costing you? Do you know it could cost you $70,000, $80,000, $100,000 because you want to feel good? Would you feel better having $100,000? Most people say, I think I'd probably feel better having $100,000 than having a 30-year mortgage that I'm not going to keep for 30 years. The fact of the matter is very few people keep their mortgages that long. I think the last number I looked at was the average person keeps their mortgage 3.2 years. They stay in their house 8 to 9 years, right? The number for the hold on the mortgage is increasing right now because the last few years we had so many people that got into those mortgages under 4%. But now that people got into 8%, 7% mortgages, well, as soon as rates start coming down, they're going to redo those loans. We're ready for that. We understand that, but you still have to look at it and say, what's the right product for you? What makes sense for you? I've talked to a lot of folks that the Home Select is the best program. I just consulted with someone over the weekend. They have a 2.4% interest rate on a 30-year loan. And the Home Select is going to save them, I think, $60,000. I'm doing it off the top of my head. Saving $60,000 in interest. And because of some of their financial situation, instead of being paid off in the next 27 years under their current 2.4%, they're going to be paid off in 3.9 years. That's called strategy. That's called suitability. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Why moving to a smaller home after retirement makes life easier. We'll talk about that. And we're going to talk about reverse mortgages, everything you need to know. What are some of the myths? All that and more. Reach me anytime off air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Hey there, friends. Wondering if now is the right time to buy a home? Or are you waiting for a bunch of foreclosures? The facts speak loud and clear. Defaults and foreclosures are down. Sure, we might be headed towards a recession. But did you know interest rates typically drop and real estate values often go up during a recession? So what are you waiting for? Higher prices or higher payments? Don't navigate these waters alone. Connect with RonSiegelRadio.com today. That's RonSiegelRadio.com.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the real-time real estate segment today, being brought to you by the area trusted real estate professionals of Ron Siegel Radio. RSRmoney.com, RSRmoney.com. Go there and get the information about your property. Again, I talk about the real estate professionals, and I was just doing a speaking engagement last week, and I've talked about this for years and years about having your household board of directors, and that is the real estate professionals. That is the lender, liability advisor, that would be us, the financial planners, the estate planners. You've got the whole group. If you don't have them, give me a call at 800-306-1990. Be more than happy to put you in touch. I ask people frequently when we're consulting with them, do you rate on a scale of 1 to 10? 7's a cop-out, so you can't use 7. So on a scale of 1 to 10, tell me about trying to find the exact the list of everyone that's on there. But tell me about your financial advisor, your insurance advisor, your estate attorney, your real estate advisor, your liability advisor, your tax person. 1 to 10, 4 is a cop out. You can't give me that. If you don't have 9s and 10s under all of them, well, that's where we come in, and we like to help out with that because we do know 9s and 10s in every one of those areas. So if you don't have that, give us a call again, 800-306-1990. We're happy to get you in touch with some of these professionals who can actually maybe make you some money, save you some money. I'm a big believer that good advice doesn't cost you anything. It's, in fact, in most instances, it saves you a whole lot of money or makes you a lot of money. So I just want to throw that out there to you. Again, give me a call on that. Why moving to a smaller home after retirement makes life easier? Retirement is a lifetime. It's a time for relaxation, adventure, and enjoying the things you love. As you imagine this exciting new chapter in your life, it's important to think about whether your current home fits your needs. If it's too big, too costly, or just not convenient anymore, downsizing might help you make the most of your retirement years. To find out if a smaller, more manageable home might be the perfect fit for your new lifestyle, ask yourself these questions. Do the original reasons I bought my current house still stand, or do I have needs that changed since then? Do I really need and want the space I have right now, or could somewhere smaller be a better fit? What are my housing expenses right now, and how much do I want to try and save by downsizing? If you answered yes to any of these, consider the benefits that come with downsizing. There are many reasons why you should downsize. Here are just a few from Bankrate. Financial savings. Older adults with higher medical insurance costs might benefit from saving on these expenses like utility bills. Less maintenance if you're tired of housework. Why not move to a smaller home with easier upkeep? Simplicity. Downsizing cuts clutter and helps you focus on what matters. Health concerns. Many seniors downsize for fewer stairs and easier access to hospitals, and transportation. You're seeing that as a chart right there on our screen if you're watching us on RonSiegelRadio.tv, any of the socials, the ABC, News and Talk, AM 1490, FM 98.1 video feeds. Your equity can help make downsizing possible. Those perks sound like something you'd want. You may already have what you need to make it happen. A recent article from Seniors Guide shares, quote, and at a time when homeowners age 62 and older have more than $12 trillion in home equity, downsizing makes sense, unquote. If you've been in your house for a while, odds are you're one of those homeowners who's built up a considerable amount of equity, and that equity is something you can use to help you buy a home that better fits your needs today. Greg McBride, Chief Financial Analyst at Bankrate, explains, quote, downsizing can mean taking that equity when the home is sold and using it to pay cash or make a large down payment on a lower priced home, reducing your monthly living expenses, unquote. When you're ready to use all that equity to fuel your next move, your real estate agent will be your guide through every step of the process. That includes setting the right price for your current house when you sell, finding the home that fits your evolving needs, and understanding what you can afford at today's mortgage rate. Bottom line, starting your retirement journey, think about downsizing. I call it right sizing. It could really help. And when you're ready, give me a call at 800-306-1990, 800-306-1990. One of the issues that I talk about with regard to this has to do with the concept of, something, maybe the reverse mortgage is right for you. I know one of the myths of the reverse mortgage is the concept of purchasing a property. Yes, you can buy a house with a reverse mortgage and maybe even get a little nicer lifestyle. Think about this concept, and then we're going to get into the workshop in just a bit. But the concept here is you've got a house, you've been making payments for decades. Maybe you don't even have a mortgage on it. Now, I'll be the first to tell you, leading a lending team, we don't lend money to people who need money, for the most part. We lend money to people who want money. Big, big difference. So you need to make sure you've gotten that taken care of in advance. What does that mean? Well, if you don't qualify. You're too young for a reverse mortgage, maybe, and you've retired. If you didn't take care of getting your house in order financially, liability wise, could be a problem. But let's talk about our seniors. Got a house, you've been making those payments for years and years. Let's just say it's in Orange County and you've got $800,000 in equity. A lot of equity right there. And you say, okay, I want to go out to the desert. I want to buy a house for $500,000. Well, think about this concept. And I don't know what your numbers are. We'd have to figure that out for you. But maybe you want to buy it, let's say 600,000. Makes the numbers easy. You go out there and you look and you say, okay, I found the price for property for 600,000. I just cashed out 800,000 in equity. What if I take and I put 300,000 down, get a reverse mortgage, not have a payment for the rest of my life? No payments the rest of my life. And I have $500,000 to do something with because I sold that house that I've been making payments on for years. It's an addition to your savings that you already saved for retirement. What do you do with that? Well, you give it to a financial advisor who understands some of these philosophies. Again, if you don't have one, we'll put you in touch. But think about that concept, because now what you're thinking, we're saying is that $500,000 if, and I only say if we can get that return at 8%, which I know many, many ways to do that, you're talking $40,000 a year. Now, most of the time now, used to be you say 4%, now I say like 5%. You take 5% of whatever that if you're holding, your principal balance is, and take that as a distribution each year. So of that 500,000, you're going to take, say, 2,000 a month, 24,000 a year. You're not going to dip into that principal ever because you're going to be building over and over again. So you've got a better lifestyle because you're taking whatever your existing retirement fund is. Maybe you're taking Social Security. Maybe you're waiting to take Social Security because you don't need it right now. Maybe you've got money in the 401k. Maybe you've got other assets. But now you add another $2,000 a month to it. It's just a plan. We're going to get into the reverse mortgage in a workshop when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by, I don't know, rsrhomeselect.com. rsrhomeselect.com. Why am I passionate about the reversed mortgage? Simple. My mom and dad. Well, about 15 years ago, maybe more, my mom and dad got into a reverse. We helped them get into a reverse mortgage. Great tool. They lived with it for many, many years. And when my dad passed, my mom didn't have to make any mortgage payments. Mom passed. I was a successor trustee or co-successor trustee. So I understand the program. I understand what it's all about. I understand how to liquidate it, how to live with it, how to enjoy it. the benefits. I also understand the myths. And these are big because so many people have a misconception about the reverse mortgage. Myth number one, the lender owns the home. No, they do not. You own your own home. Doesn't change. It's a lien, just like any other lien on any other piece of property. This is just a lien. Myth number two, the borrower is restricted on how to use the loan proceeds. No. Use them for whatever you want to use them for. Myth number three, it's only for poor people. No, again. I find a lot of people are using it for strategic planning. So yes, it can help seniors that are having some financial challenges. Not saying that doesn't do it, but there are others that, they're in totally good shape, but they have other desires. We helped my friend, the late Jay Kaplan, helped somebody. $25 million home, free and clear, didn't owe anything on it. He got a $4 million reverse. It was not the FHA reverse. It was a jumbo product, but he got a $4 million reverse and was able to give each of his sons $2 million toward the purchase of a new home. They were going to get the money anyway. Didn't change his lifestyle, the father's lifestyle in any way, but he got to watch his sons and their families enjoy the new homes. They were going to get it. So now he gets to have some enjoyment. These are just things that happen. Had another one. A lady has a $10 million home, give or take, and was able to do a $4 million reverse. Gave each of her kids $1 million, or each of her kids $1 million and put $1 million in the bank. Think about those concepts. Now, those were not needs, those were wants. Wanting to see that happen. So it's not only for poor people. Number four, once loan proceeds are received, you pay taxes on them. Taxes are called income taxes. This is a loan. There are not taxes on the loan. Again, I don't give tax advice. You've got to go to your tax professional for that. But these are loan proceeds, not taxable. Number five, the home must be free and clear of any existing mortgages. No. If you've got the equity in the property, you pay off the existing lien and you get the reverse mortgage. Go on your merry way. If you have extra money there, fine. So it does not have to be free and clear. And as I mentioned in the last segment, you can even use the reverse mortgage to buy a new house. So what is a home equity conversion mortgage? That's the fancy name. That's the FHA name for a reverse mortgage. Because the reverse mortgage years ago had that bad connotation that they were going to take your home. That was in 1985 that stopped. So a home equity conversion mortgage, a loan allowing 62-year-olds or older in age to stay where you are, basically, or buy a new house. It gets access to equity. The borrower receives the proceeds in a lump sum, line of credit, monthly payments, or a combination. It's FHA insured. It is a non-recourse loan. What does that mean? Your estate will never owe more than what is owed. So they don't have to come out of pocket once you pass or leave the property. It's non-recourse. Repayment is deferred. No monthly payments are required, but you can. And sometimes there are tax advantages to doing it that way. Yes, you can buy a home with a reverse mortgage. So if you're selling a property or you get a large lump sum of money somewhere, whatever, and you go and make a down payment, generally you're going to be in the 40 to 50% range depending upon your age. So yes, you can use it for a purchase. Again, the amount you get is based on your age and the interest rate. So as interest rates are higher, the amount you get is lower because of the way that works. Home equity can be a flexible way to solve many retirement challenges. Create additional sources of non-taxable monthly income. Eliminate monthly mortgage payments to boost cash flow. Provide alternative to drawing down retirement savings and qualified plans. Purchase a new home. It gives you flexibility. You may be able to wait. When the markets are good, that's when you want to take money out of the market. When the markets are bad, no, you don't want to take money out of the market when it's bad. You can use money from other sources. This might be that other source. What happens when the loan ends? 3 options when the loan becomes due and payable. That means the last borrower sells or permanently moves out of the house, passes away, or fails to meet the terms of the loan. What are the terms of the loan? We got to pay your taxes. You got to keep insurance, and you must maintain it in a safe manner. So all of those are the terms of the loan. 3 options: repay the loan and keep the house. You might do a refinance, whatever. Might be insurance proceeds or maybe other proceeds that your heirs or your trust. Oh no, by the way, yes, you must have a trust. It's not a requirement, but you should. I digress. Sell the house, repay the loan, and keep the remaining equity. So you've got a house that's worth $800,000. You've got a loan that's worth $400,000 or due. Sell it, and the difference, $400,000 less expenses, is what goes into the estate or to the person leaving the property. If it's the senior can sell the property anytime they want to. If they, for any reason, moving out of state, want a different property, like a different community, want to get closer to the kids, whatever it is. If the loan balance exceeds the home's value, you deed the home to the lender. No repayment beyond the home's value is required. Although, if the heirs want to keep it, they can keep it. They just pay 95% of the appraised value to settle the loan. Pretty simple. Reverse mortgage has evolved over time. It's no longer the last resort. It's not merely for people with financial distress. More financial planners are recommending as a retirement strategy. If you're a financial planner, you should be talking to your clients about this because it might give you an opportunity to help them, as I mentioned earlier, with increasing their lifestyle, because they're taking some of the equity as they sell their property or move to another property or take a reverse mortgage. They're not having to pull cash out to make a mortgage payment, or maybe they're taking cash out and they're putting it into CDs or treasuries or things like that so they can take money over time and enjoy their golden years. Once you get to that age, my personal opinion, it's all about cash flow. It's all about cash flow. You're not building wealth anymore at this stage of life. You're about cash flow. How much cash flow do you have? What do you need? How do you enjoy the golden years? Options and flexibility have made a reverse a powerful financial product. I love the reverse mortgage. So we keep on, whoops, where it is. Who is good for a reverse mortgage? It's if you're over 62 years of age. There are some that go younger, but for the most part, over 62 years, 50% or greater equity in the home and resides in the property. It is not a loan for investment properties or second homes. You got to be in the property. It's got to be your primary residence. How do you qualify as a primary residence? Technically, you're there 183 days a year. That's the basis, over half the time. Smart reverse strategies. Eliminate monthly payments by refinancing out of a standard mortgage. That's what my parents did. They had a mortgage. We had pulled money out of it over and over again strategically. They had that invested strategically. They did not need the cash. But in the golden years, why did they need, I think it was a $3,400 mortgage payment? They didn't. So we changed out of it. Increased liquid cash flow. Well, they didn't have to pull that $3,400 out of their savings or the retirement funds on a regular basis. Love that idea. Bridge the Medicare gap from age 62 to 65. Well, now you've got some extra funds to be able to pay for insurance if you were retired. I like this one. Well, it didn't happen for me, but inheritance advance. I told you those 2 stories earlier about the folks, one with a $25 million property, one with a $10 million property. Their kids were going to get the money anyway. It just advanced it. So the senior got to see them enjoy it, got to enjoy the gift of giving instead of them getting it after, they passed. How about the 401k and the IRA extension? You get to strategically take the money. You're not taking the money when you have to. You're taking the money when you want to, when it's strategic for you. What's the process like? Well, it all starts with a consultation with a counselor consulting with the borrower. Actually, we talk to you first, then you go to a counselor and application complete. What does that mean? Well, you're going to have to go and have counseling. Generally, right now, it's done online. So there's counselors all over. We give you a list of about 10 different counselors to use. Then on the back end, the team will pull a case number and order for the appraisal and whatever services or needs. Files submitted to underwriting just like any other. Conditions are issued, clear to close, and you get the money. But requirements: live in the home permanently, stay current on property taxes and assessments and insurance, keep the homeowner's insurance policy in place, and maintain the home. It's got to be safe. We're not looking for anything like that. Remember, the homeowner keeps full title, ownership, and control of the home. That never changes. Qualifications: all borrowers must be at least 62 years of age, must have sufficient equity, pass the financial assessment. Not too hard. If you don't pass the assessment, then you might have to go with a set aside for taxes and insurance. Must be the primary residence, no second homes or vacation homes. All borrowers must attend the counseling. We talked about that. 4 nevers. The homeowner and his estate never give up title to the home. Number 2, the homeowner, when leaving the house or his estate, can never owe more than the home's values. Conversely, when the home is sold, sale proceeds in excess of the debt amount belong to the borrower's estate. Number 3, even if all the money that can be borrowed through the reverse mortgage has reached its limit, the borrower never has to move, provided the taxes, insurance, and home maintenance are continued. Number 4, monthly repayments are never required or expected, although voluntary payments are accepted. So you can do that. Eligible property types: single-family residence, modular homes, 2 to 4 family residence where the borrowers occupy one of the units, townhomes, planned unit developments, PUDs, condominiums, if they're approved, site condominium. All of those things are good to go with it. Got to make sure your state and local taxes are current, or they have to be made current. We look at that also. Talked about the living in the property. There are some alternatives. If the home equity conversion mortgage, the FHA product, isn't the right one for you, there are seconds that are available. There are jumbos that are available that'll go up to a higher loan limit. And as we've talked about many, many times, the Home Select loan may be the right one for you as well. So we look at all of those options to find out what is the suitable product for you. That's the Borrow Smart segment, talking about reverse mortgages, brought to you by rsrhomeselect.com, rsrhomeselect.com. Also, want more information? Ask about reversemortgages.com. Ask about reversemortgages.com. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.